Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options and ES futures. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. Last week, we started our new SPX 0DTE model portfolio, debit strategies only, with alerts delivered directly to our Discord server. And it was a good start to the portfolio. We took a total of 17 trades, 12 winners, 5 losers, for a total return of 9.14% with a 1% risk model. So we're not risking more than 1% per trade. So even though we had a couple of 100% ROI losses, it did not exceed 1%. And this is absolutely essential to get you through those drawdown periods, which are inevitable. We did have a drawdown of 1.89% on Tuesday. But we did come out green on all 5 days of the week from Monday to Friday, and we're going to keep that momentum going here this week. We did see a bit of a change in character on Friday. Of course, we had the big option expiration, which was influential, pushing price to those double zeros and 50s, the high liquidity strikes, which we saw all week. And that was the case on Friday, opening with a gap to the downside. Breaking below, opening below the SPY flip level, which was 74.60. That's generally a bearish indication. Price pushed into the big 7400 handle, G2. We did see a nice bounce here. We actually picked that low. And we moved into 74.50, G1, another big gamma level. And ultimately, we just remained in that box, that 50-point range into the close. Now, we did close at lows, which is generally a bearish indication, telling you that selling was not done. So when you close at the lows, there's a good chance you do see follow through on the downside. And I think that is the case here. Pre-market, SPY down about 0.4%. So we are seeing a little bit of continuation to the downside. Now this also goes in reverse. When you close near the highs, generally buying is not done. And oftentimes you do see that continuation the following day, which we also saw last week as well. Now, what was interesting here on Friday is the SPX sold off and the VIX also caught a bid up to that 19 handle, which has been a point where vol sellers have been quite active. This was not really the case on Friday. It was just kind of sticking around that 19 handle. But we've seen the typical inverse correlation between the SPX and the VIX break down over the past 3 to 5 weeks. Recall on Tuesday, we saw the move down in the SPX, right? We had over a 1% move, I believe. About a 1% move, and this led to a V rally. But what was interesting here is that even though SPX sold off, VIX didn't really catch a bid. I believe it was up 1-2%, telling us that this was primarily driven by equity, which again has been the case for several weeks now. Equities leading the options market, which is not typical. But it looks like we're back to that normal inverse correlation between SPX and the VIX. A large reason for the weakness on Friday, or the absence of follow through on the bounce, was in response to the breakout in the US 10-year above the 4.5% handle, which has historically been a headwind for risk assets, so it does threaten that semiconductor trade. If we see further upside in the US 10-year, that is likely going to exert downward pressure on the SPX. VIX also key this week. We have that 19 handle where vol sellers have been active going back to the end of April. In the event we do break out, it opens the door to the 20 handle and then 21.5, which is the max pain for Wednesday's VIX option expiration. So potential target on the upside, and we could settle there on Wednesday. We've seen the max pain play out with high reliability over the past 3 to 4 OPEX cycles, moving into and pinning around that max pain level. So key level to watch on the upside. In terms of the SPX today on the 15-minute time frame, the trend is down. We have the 20 EMA in green, below the 40 EMA in red, down sloping. And we have this large confluence zone on the downside, 7400, which does remain a big gamma level. We have the SPX flip below that, 7395. SPY flip also in there at about 7397. And the previous session's low. So big confluence zone. A break of that previous session's low is the trend continuation signal. for a potential move into 73.75. This was the bounce point on Wednesday. And then below that, there's a lot of micro levels on the downside, which we'll highlight on the GEX chart in a second. But I would say the major confluence zone on the downside is going to be around 73.35. This was the bounce zone on Tuesday. We have the previous week's low in this zone at 73.38 and also the one-day implied low. So major level here or zone on the downside. In terms of the upside, bulls are going to have to reclaim those transitional levels because below, we would say the bears are in control and we would expect elevated volatility. But in the event bulls do reclaim that, they will reestablish control with major resistance on the upside at 74.50 and a large gap overhead to about 75.01. Transitioning over to our dashboard and starting from the top, the first thing we want to know is what is the character of the market, and there's a few things we look at. Number one, total gamma exposure. Are we positive? Are we negative? And to what extent? Today, we are still positive, 610 million notional, although you can see we're down about 60% from the previous day, and this is in response to the option expiration and all the gamma that rolled off. So we generally get a bit of a reset in positioning post-OPEX. But where this actually transitions from positive to negative is going to be SPX 0DTE. Now, why does this matter? Well, when you're in a negative gamma environment, you get a lot more volatility. So what we're looking at here is the SPX return distribution. We have the zero line right in the middle here. To the right, positive gamma. To the left, negative gamma. And each dot represents a day, right? So this is the daily performance. So as we can see to the right, we have a narrower return distribution. As dealers buy dips, sell rips, it suppresses volatility, creates much more mean reversion in the market. When you're below the zero gamma level and you're in negative gamma, you have a wider return distribution, a lot more volatility as dealers sell weakness, buy strength. And this volatility occurs not just on the downside, but also the upside. So as you can see, some of the biggest market rallies occur from a negative gamma state, generally a much more challenging environment to trade. Now, the flip level generally leads the zero gamma level. So in terms of 0DTE trading, we give a lot more weight to the flip levels, which again today, SPX flip level 73.95. Now, another thing you want to keep an eye on coming into markets is what is the market pricing in? What is the options market pricing in terms of volatility? As of right now, we have the one-day implied move 1%. That is a 74-point move. Implied low 73. Let's go to this chart here so we can actually. So we got spot price 74.09. That's where we closed on Friday. We have the implied low at 73.34. Right, so that creates confluence with those other levels we talked about, and then we got the implied high at 74.82. In terms of the 5-day implied move, 5-day implied high 75.67, 5-day implied low 72.49. So that is the one standard deviation range for the day, as well as for the next 5 days. Now, if we look at gamma on a per strike basis, 74.50 remains a very positive gamma strike. If bulls can reclaim that, we will start to see more supportive flows, but below, negative gamma bars are starting to build. But most notably here below 73.95, which is our volatility flip. Essentially all strikes below negative, that is destabilizing for the market price, with the exception of 73.75. So potential bounce point there. But if that breaks, again, there's just a lot of little micro levels here, but a major confluence zone as highlighted, 73.35 zone. And then we have another pocket of gamma here at about 73.20, 73.15. So we'll take a look at where our max put is today. So that's essentially utilizing 0DTE options volume to determine price targets on the downside and the upside, as well as upper bound, lower bound intraday, utilizing 0DTE positioning. Of course, the market is closed now, so we don't know where those strikes are, but that's something we're going to monitor throughout the day. But it's really the bulls need to reclaim that 73.95, 7400 zone to reestablish control. Now, if we go to the SPY, similar profile here, right? We got 73.8, which is the flip level, which is again in that 7,400 zone. And as we can see here, all strikes below negative. That is destabilizing for the market price. In terms of catalysts, we have existing home sales due out at 10 o'clock. It is a known high impact event. Additionally, geopolitics, the tone is escalating between US and Iran. So keep your news feed up and remain vigilant. If you want real-time SPX 0DTE trade alerts, plus the full framework to trade the market with Edge, join the team at 500edge.com.